This is Craig Haugard with your Financial Issues Ag Update. Well, the USDA's supply and demand report took center stage yesterday. After resurveying North Dakota, the USDA ended up reducing last year's harvested acres of corn by 100,000 acres and decreasing the national average yield by 0.4 of a bushel. That dropped the overall production number by 46 million bushels. On the demand side of the equation, ethanol use was reduced by 50 million, and the general consensus is that it'll be cut by an additional 50 million in the next month or so. The net result was that projected ending stocks increased slightly to 2.1 billion bushels. Looking at the projections for the 2021 crop year, we saw no changes from last month, which puts the projected carryout for the next marketing year at a touch over 3.3 billion bushels. In the overnight trade, we have spot corn futures trading a penny higher as I record this. Soybeans saw the USDA reduce the 2019-20 production by 5 million bushels, while increasing crush by 15 million. They also dropped exports by 25 million, as China has not been buying as much as they had been expected to. Those changes put the 2019-20 carryout at a projected 585 million bushels. Looking ahead to the 2020-21 marketing year, the USDA increased the projected crush by 15 million bushels, which took projected carryout down to 395 million. In the overnight trade, we have spot futures trading 2 cents higher. The USDA U.S. winter wheat production came in above the average trade estimate, which in turn pushed the U.S. new crop ending stocks to 925 million bushels, also above expectations. World ending stocks for the 2020-21 marketing year were also projected to be a record 316.1 million metric tons. That number guarantees we're going to continue to face strong export competition in the coming year. In the overnight trade, we have Chicago trading 3 cents lower, Kansas City is down a penny, while Minneapolis is trading a penny higher. Cotton futures retreated, with the July futures finishing 49 points lower as they settle at 60.02. The USDA painted a picture of increasing stocks, with the 2020-21 marketing year projected to have ending stocks of 8 million running bales, and that's up 300,000 from last month's report. In the overnight trade, we have spot futures trading down an additional 43 points. Livestock futures were lower. All of them were lower for the session, with the August live cattle futures ending the day down a nickel, while August feeder cattle were 50 cents lower at the closing bell. Lean hog futures gave up some ground as well, with the August futures down 95 cents at the close. Class 3 milk futures also seemed to be under pressure all day, and at the end we had July futures close down 45 points as they settled at 18.91. Meat cutout values seem like they're starting to stabilize a bit. Choice box beef was 50 cents lower yesterday, closing at $235.56, while select boxes were $2.96 lower as they settled at $219.88. Pork carcass cutout values were a bit stronger, finishing up 62 cents and ending the day at $69.46 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.